Welcome to the Building Web3 podcast. Today we're diving into the world of Bitcoin mining with Hive, a $500 million company. Discover how Hive is transforming the crypto mining landscape and now taking on the AI computation space. Remember, nothing stated here is financial advice. Welcome to the Building Web3 podcast. Today with two of my good friends, Aydin. He is the president and CEO at Hive. And then we've got Frank. He's the co-founder and executive chair at Hive. Before we get too deep into Hive, could I get a brief background into you two and what brought you to the Bitcoin mining space?
Well, I think Hive was a creation because I was trying to launch a Bitcoin ETF in 2017, and I realized it wasn't going to happen. The regulatory pushback had only happened this year in the US. So you think of it, I was early in, but I recognized that if you're a Bitcoin miner or mining Ethereum at the time, you create the virgin coin. So you don't have a AML KYC. And so I put up the first $5 million, which is the launching of Hive. Immediately, 25 million came behind it. And then institutions, Fidelity was a big sponsor. It was the first crypto mining company to go public, and it was done in Canada. Then many other companies, now there's like 24 of them that have followed. But we were also mining Ethereum in Sweden and Iceland using GPU chips. So this is really important because it lent us the skill set of being able to go into AI, which I can give you more granularity. But I'm a money manager known for the world of gold. And I went to Consensus in 2017, and I couldn't believe there's Abigail Johnson, the CEO for Fidelity, speaking at a blockchain crypto event, Web3. And it really said, wow, something big is happening. Look how many people are here, and they're all spending $1,000 a ticket. There's something else happening in like another metaverse. So that really inspired me to say, okay, I'll put money and let's get launch Hive.
Absolutely. Aydin?
Yeah, well, I think in 2016, 2017, I saw these ICOs come out, and it was interesting. I knew some guys that were mining Bitcoin, and just with where I saw the industry going, I mean, those ICOs that I invested in were flops, but I saw that Bitcoin mining was a real business, and I was actually inspired by Hive because Hive was the first public crypto miner ever. So I founded into my own public company. We were doing crypto mining, and then I joined Frank full-time in 2021, really to build Hive into our vision was to build it to a $10 billion company. And so there's been no looking back ever since. As I mentioned earlier, Hive used to be the world's largest Ethereum miner, one of the largest, at least a single site in Sweden. I've never seen a larger Ethereum mine, 120,000 GPUs in one location. And it's from there that we had a springboard to get into HPC, because GPUs, as you likely know, are the bedrock of large language model training and inference. And so we had this armada of GPUs, and so we started repurposing them. But we've also mined altcoins with GPUs to earn Bitcoin. So, at Hive, we're all about that being the best pound for pound, no matter how you cut it, right? So we have the lowest G&A per Bitcoin mine. We have high hash rate utilization for Bitcoin mine. We look at often, okay, if we're going to mine and we're going to consume a joule of energy, what is going to yield the best value for our shareholders? Is it hashing in Bitcoin? Is it hashing in altcoin? Or is it running a teraflop for an AI computation, right? And so we often will look at the dollar per kilowatt hour value that we can generate from the infrastructure we run. And to Frank's point, Hive was the first company that put data centers on the balance sheet, right? Because the economic life cycle of an ASIC miner, 2, maybe 3, 4 years if you're lucky. Data centers, 20 years plus, right? So you want to own your destiny. And so that's why we were early in putting data centers on the balance sheet. And, if you ever have a chance to visit one of our facilities, especially our New Brunswick facility, I describe it sort of as a military grade Bitcoin mine, right? It was purpose-built, passively cooled. We just really want to do the most that we can, given any resource, whether it's a joule of energy or, a share of capital.
Absolutely. And let's go a little deeper into Bitcoin mining itself before we get into your guys' pivot. So back when I got into Bitcoin, unfortunately, I'm not a bajillionaire, even though I was an early entrant in 2012. Like you could kind of run things off your computer. Like Bitcoin was probably at like $30 a coin. It was crazy times. But then there was a lot more, computer power that had to be thrown on it. Kind of talk about how you guys create these like larger scale data centers for like, Bitcoin and kind of just what the mining landscape is.
Originally, a lot of the crypto miners were retrofitting facilities. So you'd what we nickname a brownfield in the industry. You'd find an old warehouse. For example, our facility in Quebec used to be a graphite factory, and so but it had a massive substation there, and so we were able to repurpose that. You see that a lot throughout America in states where the kind of industrial boom had kind of come and gone. You had all this infrastructure in place that was really not being utilized. And then in other cases, you'll see what we call greenfield, which is purpose built. And that's what we have, for example, in New Brunswick. As it really, I think the key driver is as Bitcoin industrializes and the industry advances, how we participate in a sustainable manner with energy producers is working directly with them, be they independent producers or utility companies. And what that usually means is setting up our operations close to the source of energy generation. Two reasons. Number one, energy is very expensive to store. Energy is very expensive to transmit, right? So all these utility companies in Sweden, we're right by the Arctic Circle. We're in an area with a lot of hydropower. So the national energy providers happy to have us there because we're close to the source of generation. We buy their electrons, and in periods of peak demand, we can actually tune down our operations, which you probably heard is called demand response. And that actually balances the grid, right? So it allows them to sell electrons when there's excess supply, and when there's areas of peak demand, we can curtail a little bit, right? So that's how the industry has evolved over the years, and so whether it's a greenfield or a brownfield is more just consequential of where's the power at.
Absolutely. So let's talk a little bit about, you guys have these giant data centers, some greenfield, some brownfield, and then you guys are pivoting into more of the AI computation space. Talk a little bit about the strategy, like why not continue, mining Bitcoins.
I just before we jump into there, I really think it's important for listeners to come back to recognize that Bitcoin's success demonstrated the potential of Web3. And then first off with cryptocurrencies, and that was a big thing that Abigail Johnson talked about, that she wants to see everything validated, the blockchain for all securities, all trades, the transparency, stop illegal shorting of shares. So there's many benefits that come from the success of Bitcoin. But I try to tell people that 1991 blockchain was created as a timestamp. And it was like 10 years later, it comes out peer-to-peer with music, with Napster. And then comes out SHA-256, and the brilliant mind puts it all together. And that's now evolved to Web3. So how it's going to evolve, what blew us away a year ago, remember, Aydin, when we were talking about ordinals?
Yeah.
It's just the fact that when you have the Bitcoin network of plus 18,000, it's so resilient around the world. It gets knocked down by China, comes right back. It gets knocked down by the U.S. government, comes right back. It's remarkable. It's because it's decentralized and it's a global phenomena. And now all of a sudden that network is going to become very valuable for distribution. And we see the creation of these ordinals for art. And now I see coming up in Nashville before the big Bitcoin mining conference is a whole day of just nothing but ordinals. And this is all part of Web3. This is all part of the ability to put things into a contract to the blockchain. So I think when you start throwing money at coders and developers, that anything can come out of here in this new metaverse, and we're actually is a real metaverse of the Web3.
Yeah, absolutely. And if people want to go to Bitcoin Nashville and go see all of us, promo code Jax.
Yeah, so but we have to come back to Bitcoin validated and proved something, and it was built by we the people for the people. It wasn't built by one corporation. it was built by guys like you all of a sudden discovering this, and Aydin discovering, and me discovering, and we start to build on one top of the other. So where will it go? We don't know, but we do know we're in the data center business. That's what's really important to recognize. We are in the data center business, and the great digital transformation needs data centers. And what we have found is the value of our data centers is much better and faster for hyperscalers, like we're seeing CoreWeave go after Core Scientific, because they have all of a sudden the infrastructure in place. And if you go start on ground zero to build a data center for AI, it's going to be a 3-year to maybe 4-year journey. If you already have a Bitcoin mining facility in place, then you can fast track the spend of making this into an HPC tier 3 data center. So this is all brand new to us. We didn't know this 9 months ago, did we?
Yeah, it's been an immense learning curve, because to Frank's point, when we're building out Bitcoin mines, we're doing high voltage power distribution, right? We've got high voltage lines coming in at 132 kilovolts in New Brunswick. So we have that know-how. We manage substations, so stepping all that voltage down and then distributing it across, thousands, tens of thousands. In fact, we have 25,000 ASICs in New Brunswick alone, just as one example. And globally, we have over 50,000 ASICs. So think about how many plugs you've got, right? And so you've got to take super high voltage, which comes in on one line, and then drop that voltage and spread it out, right, to tens of thousands of machines. So there's some know-how in there, but Bitcoin mining is a really good one. I like how Frank puts it. A Bitcoin mine is like a Ford F-150, right? It's a rugged piece of infrastructure. You walk into one of our HPC facilities, it's like a Ferrari, right? You can eat off the floor. It's redundancy. There's air cooling, air conditioning. And it's almost like an art gallery inside. Like the temperature is always perfect. And so, because you can't afford any downtime, right? If you're offering AI compute, Bitcoin mining, if a server goes down or freezes, that's okay. You've got thousands of other ones, right? You're just submitting hashes. So there's commonality, right, in terms of the high power infrastructure, but then there's nuance in the finer levels of execution. And so because we were an early adopter, I think it really helped us be ahead of the curve. And so that's why it's really exciting. Like, we've got about 4,800 GPUs right now that have been repurposed for AI, operating in tier 3 data center. And I get another important stat, the profit density when you look at these two business units. Bitcoin mining, right? If you want to get 100 million of revenue, broad strokes, you're going to need about 100 megawatts of power, right? And if you want to get 100 million of revenue with AI, you can do that in less than 10 megawatts, right? So there's over a 10x profit density of AI relative to Bitcoin mining. And so that's why you're seeing this land grab happening all over North America, really any jurisdiction where data centers, are prevalent.
And what's the process for converting a data center from Bitcoin mining into accommodating this AI capabilities?
Typically, it would be ensuring you have redundancy of power, upgrading the network infrastructure, having cooling. But it's worth mentioning at Hive, our operations they're not co-located. So the AI compute we're doing in Quebec is in Montreal. Our Bitcoin mining is an hour and a half drive outside the city, right? Similarly, we have tier 3 AI happening in Stockholm, Sweden. Our crypto mining is happening in the north of Sweden by the Arctic Circle. So it's usually but you can also convert. You can also convert in the manner I described.
I like to add, Aydin, is coming back, Jax, to data centers. HPC versus Bitcoin mining, we were the first to do what's called balancing the grid. And that was very important for helping utility companies not have to spend a lot of additional capital building another hydro dam. And when everyone turned on their toasters in northern Sweden in the morning, or their hair dryers, that the electricity demand spiked. So we can go from 30 megawatts to 3 in seconds with software and then go back up. and it's cheaper to pay us to turn around and balance the grid for them. Well, Riot's done that in Texas, and last year it was their biggest source of income was not from Bitcoin mining, it was from balancing the grid. But you can't do that with HPC. You have to be up 99.9% of the time. I mean, like just this, you have to be on, you have to have a perfect everything. Otherwise, those clients complain and they'll leave you. So the sensitivity of mining an ASIC, of managing an ASIC chip is very different than GPU. And the use of energy, you can't use intermittent electricity. You have to be up all the time. So now when you take one of our Bitcoin data centers, we could turn around and look to split them and say we have 80 megawatts. Well, we're going to commit 20 megawatts out of the 80 megawatts to HPC. Well, that 20 megawatts will do as much revenue as the 80 megawatts.
But because of the balancing?
The cost, yes, but the cost per megawatt. So when you're going to build a Bitcoin data center, just think in round numbers, it's $1 million a megawatt. But when you're going to do HPC, it's 10 million. You have to have all this redundancy, and you have to make sure that that electricity is not intermittent. And so it does change. It's a much bigger capex buying NVIDIA chips and building the redundancy and the infrastructure than it is for Bitcoin mining. That's so when we go on this path, the great digital transformation needs data centers, but the Bitcoin mining has other functionality that's so important to the global use of electricity, especially where electricity is a surplus and wasted. Where a lot of electricity, you spend all this money building a power station, and you can't actually, no one's there to use it. All of a sudden come Bitcoin miners and they're able to use it. Now they can build more power lines. They can put up more electricity, like especially in Africa, they can build for villages that to this day, I came back from Africa last week, and you just can't believe there's a big hydro dam over here and there's villages with no electricity here because there's been no mechanism to have cash flow to build for the communities. Bitcoin miners can do that.
So people may think that like these giant, hydro dams, they have batteries where like if they have excess electricity, it's no big deal. Like they'll just store it for later and maybe they turn down. But talk about
that was one of my introductory comments is that two things, right? It's expensive to store energy and it's expensive to transmit it, right? Transmitting energy is lossy, so you have to have transmission lines that go across a province or country, what have you, and so A, it's expensive to build them, and B, there's loss. And same thing with storage. So that's why, as Frank was illustrating, grid balancing is so key for a lot of these utility companies. There's this conception that crypto miners are quote unquote stealing power. No, we're large industrial customers, right? We have accounts, right? Like they're selling us electrons and we get approved for it. And just like any other big enterprise, we're a large industrial customer to these utility companies. And so where we're unique, and this is very key, is that unlike a factory that's on shift work and their production line is going, they're not going to, pull the red lever and hold the production mid shift. We can fine tune our consumption all through software, right? We can get signals, which we do in Sweden, for example, and even in New Brunswick, we've got a pilot project where when the utility says, this is a time of peak demand, can you reduce your consumption? Here's why. Perhaps this would be helpful. Power companies will have a primary source of power. They'll also have a secondary and sometimes a tertiary source of power generation. Those secondary and tertiary sources are much more costly for them to operate. And so they only bring them on as a last resort when they really need to service the grid during times of peak demand. For example, when everybody gets home from work, when everybody's up in the morning getting ready for work, right? So the profile of consumption varies throughout the day. So if we can help the power producer not have to flash up the secondary and tertiary sources of power by us temporarily curtailing it, not shutting it all down, right? It could be 20%, 15%. Is it half an hour? Is it an hour and a half? It doesn't matter. They save money, the consumer saves money, and we get incentivized for that. So it's a win-win-win, right? But you have to be set up to do that, right? And so again, like when I talk about Hive's ethos, right? We have the lowest G&A for Bitcoin mine. We've been the first company doing demand response. We've been a participant in Sweden since 2020, right? We have the lowest dilution in the sector when you look at it from a capital markets perspective, right? So we just try to look at the entire sphere of Bitcoin mining as a business in the most impactful, sustainable manner. We haven't even talked about the heat reuse that we've been doing in Quebec, where our 30 megawatt facility heats our industrial neighbor. And I believe it's a 200,000 square foot building frame, right? And so it's a swimming pool factory, right? And so there's a glycol pump system where the heat energy for a Bitcoin mining, this is rural Quebec, it gets bitter cold in the winter, right? So we're able to reuse those electrons, joules of energy, and that was to offset the heating consumption needs of our industrial neighbor, right? So it's almost like how do you build the best possible mousetrap, and that's what we ardently pursue.
Absolutely. Let's talk a little bit because Frank brought this up earlier, and at Bitcoin Nashville, there's going to be a huge ordinals event. We've seen like BRC20s, we've seen runes come out. So there's kind of been, in my eyes, a bit of a renaissance in Bitcoin the last, we'll call it like year and a half. How's that in data centers, and kind of where do you guys see that going?
I think that it's more and more implementing use cases. It's like the technology. It's really about the technology, right? Like Casey Rodamore, I was at Bitcoin Asia, and he was speaking on a bunch of different panels there. It was, I think, shortly after the launch of Ruins, and so it's. I just think back to the days of cell phones, right? We had 4G speed before we had any use for it, in 3G, right? But then the iPhone came along and changed everything. Suddenly people went from consuming minutes to bits of information. And so once you had smartphones and applications, people, how many gigabytes do you have on your monthly phone plan now? 30, 40, right? 10 years ago, maybe not even a few megabytes. So now that these rails are in place, right? We can do many quick micro transactions. We can put with Lightning, we can put information on the blockchain in more and more efficient ways, whether it's a BRC20 token or it's an image with ordinals or ruins. And so where is that going to go when different use cases backed by Bitcoin come out? And I think that's what's going to be extremely, extremely interesting for the Bitcoin ecosystem. You have to build the technology, and then when creative use cases come out, that's when it gets super exciting, because then the rails are in place and I expect demand to flourish.
Absolutely. I don't know, Frank, if you have anything to add to the ordinals runes conversation. If not, we'll talk about the challenges of kind of building some of these data centers and how you guys have worked to overcome them.
What really blew me away about ordinals, because some of these crypto, I call them fanatics, like the Bitcoin hornets, as Michael Saylor likes to call them, were saying $1 million in Bitcoin is going to $1 million. And at first you say, well, it's always plausible, because if you limit supply and you apply Metcalfe's law, then more people adopt and things can go up. But how fast could it happen? And then all of a sudden you start doing the calculations, and at 1 penny, 1 Bitcoin is worth 100 million Satoshis. At 1 penny, that's $1 million Bitcoin. Oh, well, that's still far off. It's 0.000, I forget what it is today, value of a Satoshi. And then all of a sudden, we start getting offers for some of our Satoshis because they have a unique code. And I've always believed that green Bitcoin that have not been in circulation will be like art, and they'll be more valuable. That's just my thoughts from day one of studying art and appreciating art. When you have Warhols and you realize that the original came out at $1,000, and 30 years later it hit $250,000. So we got offered $250,000 for a bunch of our Satoshis.
Yeah.
So that means they're worth not just a penny a Satoshi, they're worth $1. That's 10 million.
Yeah, we had because we've been mining for so long, and we've got over 2,400 Bitcoin on our balance sheet. So you think about that, and we have a bunch of uncommon sats, right? We ran a scan, and we were given offers. I think it was for something like 500 uncommon sats. Like people were willing to pay $250,000. It was intense. But it's also one of those things where, you kind of commented earlier, you got into Bitcoin in 2012, and too bad you're not a bajillionaire, because who would have known it would have gone to 65,000 or 70,000 or whatever. So who knows? Those guys, those same guys wanting to buy those uncommon sats for $250,000 probably think they're going to be worth a hell of a lot more than that down the road. Right. And so we didn't end up selling them because we were like, we didn't need to sell them. It was just nice to know that we had them. And as we continue to mine, we continue to potentially accumulate them. So, it's just, again, like as a publicly traded company, we're always thinking about how can we build value for shareholders, right? And there's the obvious ways, but then there's these more creative ways that we also always look at, right?
Yeah, and can we just get a definition? Because people are probably like, Satoshis, we understand that, but uncommon sats, what does that specifically mean?
Oh, so there's basically a table if you Google, uncommon Satoshi. So a different, so you imagine when you have a block issuance, right? So for example, the first Satoshi, right, of a block issuance, right, would be uncommon. The first Satoshi at a difficulty epoch would be rare. The first Satoshi at a halving is they have these funny names, like there's mega rare or rare. I off the top of my head I forget. And then like there's one, like the one Satoshi, the first ever, which is like the Genesis one. So there's like, it's like I don't know, kids play with Pokemon or whatever, like rarity.
Yeah, that's what it reminds me of when you're describing it. It seems like an evolution, and you get different kinds of rarities of Satoshis. Yeah. That's interesting. I thought all Satoshis were created equal. This is, even I learned things on the
podcast. Jax, so what happens? A guy that's got a picture of his 8-year-old walking on the beach, and he can capture and digitize it to that Satoshi, or it's her birthday, or it's her birthday, and it becomes emotionally very valuable. So that 64 digit is unique. That's what I did not. I wasn't aware of that until I was at the Bitcoin mining conference in Amsterdam last year. And OpenSea's did a big special, and it was every year I go to Harvard, and I do a week studying. And last year was a big study on Bored Ape Yacht Club. Big study on Bored Ape Yacht Club. And that blew everyone away because all these CEOs that attend this event were poo-hooing Bored Apes. Like, look at those funny things. How can anyone pay for that? It shocks you that they went out with $10,000 at $100, and they go to $100, and they go to $30,000, $50,000, $50,000. And what do they? And the two kids that created were actually they were studying when I was discovering the creation of it and Bitcoin in 2017. They were writers, and they discovered trading Ethereum. And so here it's now Harvard case of what can take place when you have this special and then it comes after that case study ordinals. When it ramps up, there's a hot piece. Our Bitcoin network, after the halving this year, our revenue drops by 50%. But the ordinals trading on the Bitcoin network went up by 30%. So all of a sudden we're making extra money. So the development of the art world and the use of ordinals is only going to increase the value of these special Satoshis.
Absolutely. We talked about ordinals and kind of the runes. Did you guys see any uptick with places like, say, El Salvador picking up coin as, a payment currency, or that was relatively inconsequential and it was more the like ordinals?
It gets so much publicity, Jax, at this stage, but it's a tiny country. I was just with a CEO that has 1,600 employees there. And they make high-end quality hiking clothes that like Patagonia, and so he was sharing me the most significant event in El Salvador was putting all the thugs in prison. He said then women and children felt safe to go on the street. And so when I go on Twitter and I follow El Salvador, I think it's predominantly because of Bitcoin. But I think that now if Colombia with 50 million people were to do what El Salvador has done with regard to Bitcoin, now that would be significant. That would be a big number that's profound, but it's just a matter of time that it'll happen.
Yeah, absolutely. So let's talk a little bit about, this podcast is a lot about getting aspiring founders to enter the Web3 space, like encourage more people to build here. How would you guys talk about like some advice? I know you guys are more in the like data center sphere, but what do you see as like big challenges for founders kind of entering Web3 and how it might fix those?
You're talking to a lot of these AI guys who are like coming into. We went to a couple of events in Silicon Valley, and it's like going to an art symposium, but they're all AI coders. And it reminds me of the early web. Some of the people in Web3, Ethereum, were similar, but I didn't spend much more time in chatting and talking to them to get color on this. That's answering this question.
I think what you've got right now is an ecosystem of aspiring researchers and coders that are doing a ton of work in the open source community, right? And the beautiful thing about open source communities, because you've just got information and intelligence that gets proliferated. People are constantly improving. You're looking at models that come out. So, Meta will release Llama, and then they'll release Llama 2 and Llama 3. But in and along the way, you'll have these independent researchers do a fine tune of Llama or do a custom data set, and they're breaking the benchmarks. You might have heard of Mistral, right? Or Mixtral. And so they're constantly just like pushing the envelope, but it's open source, right? So you don't really make money doing it, but they're doing it for the love of the sport, right? And so I think it's amazing in a lot of ways because you're pushing the limits and we're just kind of refining. It's almost this kind of crowdsourcing intellectual capital. And there's no real cost because these coders are really just applying their own effort and brain power and consideration. But then you look at the other end of the spectrum where it's either a land grab for data centers or companies like X, like, Elon Musk reportedly bought, it was 100,000 H100s. He's just been on the hunt. So there's parties that are hyper capitalized and have massive resources. And they're really just trying to build the infrastructure and compute nodes. And I think the barrier to entry there as well, it's always going to be not just capital, but, access to the latest compute. You can't just be any Joe off the street and walk into NVIDIA and say, oh, hey, I heard about those GPUs are sure hot. I'd like to buy a bunch of them, please. Like, they're get in line, right? And and they also want to see that you know how to execute. You can build the right fabric and build the proper network infrastructure around it. And so I think those are the other barriers to entry is know-how, right? So infrastructure is credibility and know-how along with capital. And then I think what's more accessible, but even still in the open source community, I mean, a lot of these kids are savants, like they're self-taught coding geniuses. So AI is just seeming to attract the best of the best right now. It's a moment in time, is what I call it.
Absolutely. Do you see, there's been some hype around the decentralized financial infrastructure like Akash network or some of these like decentralized AI compute networks. Do you see this like having set up, data centers yourself? Do you guys see like Akash or these decentralized infrastructure projects really succeeding, or do you feel like they kind of have to be centralized to an extent?
We don't focus too much on that part of the ecosystem, and we're more on the infrastructure side of the business, right? And being a publicly traded company, if we have custody or if we exchange crypto, we work with regulated counterparties, and so usually these sort of DFIN or DeFi is a little more esoteric, and um, it's kind of, I think, more in the early stages. It's cool ideas, but I don't know what will gain traction. I think the most important thing in AI right now is just how large language models are getting smarter, and they're getting, in some cases, bigger, or in other cases, they're taking smaller models that they're overtraining, and they're realizing they're getting most better performance from smaller models the more you overtrain it compared to a bigger model. So I think the industry is trying to figure out, basically, again, how to build the best mousetrap when it comes to a large language model. And I think the future is going to be large language models that can fit on your phone, and having decentralized AI in that. Just think of the first computer that IBM sold, right? Like, IBM's total addressable market in the 60s was five computers, right? Selling to governments and other massive corporations. Now, this iPhone is more powerful than one of those mainframes back in the days. My point is, as we make the technology more accessible and compact, everyone can have access to it, right? And I don't mean using ChatGPT on your phone, because there's no magic happening on your phone. All you're doing is you're sending a web prompt to their server, right? What I'm talking about is to have an actual model living on your phone, where you can have an intelligent AI model on your phone or on your home computer that you could use and tune yourself. And that's where I think the future is.
Yeah, I'd seen people talk about this. We talked with the Morpheus team, and they talked about, that you would essentially have an LLM on your phone that you would be able to talk to. It would be like personalized to you and completely, we'll say privacy enhanced. Every time I deal with a lot of the LLMs, I use them pretty much every single day. I'm often shocked by kind of how spooky they are and how good they've gotten. Maybe you can, give us a hopeful future. But sometimes it's just like, is everyone going to have to become masseuses and plumbers? Like,
yeah.
Is knowledge work done for?
No, the new adage is you won't be replaced by AI. You're replaced by somebody who uses AI, right?
True.
So it's not artificial general intelligence. It's not sentient, right? Like, it doesn't know it's alive and it's like coming to get you. It's still just a transformer, right? Garbage in, garbage out. It's just a really smart way of deciphering the information and reconstituting responses, right? It's basically just fancy math, right? Nature's multiplication. So don't worry, it's not going to kill you.
Yeah. Well, AI plus my ex-girlfriend, it's possible she might figure out a way.
There you go. Now that you might need to be a little more careful.
So to wrap up, are there any, exciting milestones or developments people can look forward to from Hive?
Well, one thing is that we've made lots of investments in other Web3 companies, and some of them have been, quite volatile, like DeFi, big boom, then crash, then come right back. It's done exceptionally well this year. And so we continue to take some of our cash flow to incubate some of these companies like DeFi, which has done a wonderful job in building their business, just like we have during the headwinds of the bear market in Bitcoin and Ethereum. You just got to continue to deploy. But we're looking for big buckets of energy. It's hard to find the green energy. We hope that we can secure size, and we're also on that vision of reconverting some of our data centers, because we can fast track for HPC. So we think that those two parts are very important. Mr. Market out there, as they call it, values you if you have energy. How much energy do you have is going to become very valuable. And if you have HPC clients, is going to become that value proposition in the scramble and to compete with the hyperscalers. So Hive is in both, and we feel very excited that with the plans we have. Hopefully stay tuned to this TV station and podcast, because we'll have some phenomenal news in the next couple of months.
Absolutely. So where can listeners go find out more? Go, stay tuned to all of the exciting developments coming to Hive. Is there, a Twitter they should be following? Is there a website?
Great Twitter. It's super active. I would say that's the best daily source of info from Hive. And then if you want, our press releases obviously have the kind of big investor updates, but you can't go wrong with either. And we'll do earnings webcasts and put YouTube up as well.
You go to our website and you can sign up for our newsletters and our research that we publish. But on YouTube, we did it in several languages, explaining all the fun around the consumption of electricity was greatly exaggerated. We did it in Spanish. So we took something of 30 minutes of research and put it in 3 minutes. We did it in Swedish, we did it in French, and we did it in English. So we have rich content on our website, but in particular, the YouTube channel is I highly recommend people become a subscriber to it, because on a regular basis, we do educational content.
Absolutely. Well, thank you so much, Aydin and Frank. I'll put all the links in the description. If anyone has access to buckets of clean energy, obviously reach out to the Hive team and get back to building.